Hi all and welcome to TCM Education. In this video we want to discuss the importance of working / trading both sides of the market. In the past 5 to 6 weeks we've seen a continuation play up from the lows of the year in the S&P 500, so the trend is clearly up as we approach all-time highs following investors kind of pricing in the tariffs issues. Maybe not all the story is already priced in. Maybe there are some hiccups, but overall, what sounded like a big no-no for the for the market turned to be a scare and nothing else. Again, that's the story. We are back at all-time highs or near at all-time highs, like 1.5 to 2% away for both indexes. SPY and the Nasdaq 100. So most of the investors are playing one side of the market, which is perfectly fine. The semiconductors, technology are booming again. Some sectors are lagging, like energy, maybe airlines, but overall the sentiment is very much positive. Now let's talk about us as traders. Short-term traders, very short-term traders like day traders, and any other participant in the intraday trade, whatever time frame you want to call it. So let's take for example the day of yesterday, which was June 10th. The SPY moved up and down. I'm not going to show the S&P right now because I don't have time to analyze it, but you can look it up, June 10th, and see the price action. Really embarrassing, and it ended up 0.5% to the upside. So there is no trend in the S&P. So in this case, what do you do as a day trader? Okay, what do? You sit out and do nothing. You look for long plays, you look for short plays, you look for small caps, or you look elsewhere to other markets. There is an opportunity, being that there are so many thousands of stocks traded in the US equity markets, to look at the fringe of the market, meaning if the market is hovering around zero, okay, and the leadership is going to do pretty much the same, unless you observe something different, like Tesla, for example, yesterday. Go and trade if possible. You can find the quality entries and the strategy that fits your trading style. Go and trade the fringes of the market. So for example, we have here this list of stocks that dropped yesterday. Let's see, for example, these first 5. So we have here AAON dropped nearly 17%. SJM dropped 15, nearly 16%. eToro Group dropped 12. Crack & Barrel 10, and Circle 8. Okay, those stocks dropped almost. Let's go. You know what? With the 4 double-digit drops, 16 down, 15 down, 11 down, and 10 down, when the market is not doing anything. So those stocks, by definition, are way weaker than the market. Okay, so it doesn't necessarily mean that they are short candidates, but they're worth, being that they are trading outside of the scope of the market. They were weaker than the market. Maybe there's an opportunity to short them. Again, nothing is for granted. A stock that's down, or you see the number down 20%, can turn around and move up 10% intraday. It happened before, so nothing is a given. You need to check on the chart. So let's start looking at those charts. So the first one, AAON. What do we say about this stock? It started pretty much at the open of June 9th, okay, which was a Monday. Immediately at the open, it dropped down and then did not stop moving down basically until noon. And this move from 94 to 70, let's call it 78, that's a $16 move. I mean, how many of us have been in a $16 trade? And how many of us observed AON yesterday? And how many would have found, can you find an entry point? And if you find an entry point, can you get shorts? Is it shortable? So there are issues here. What is the risk on the trade? Okay, I'm just making a point here that look at this huge opportunity while the market is not doing anything. This AON, and I don't even know which sector it belongs to, is down intraday, not gapping down and moving down more. So it's down intraday double digits. So it's clearly a huge money maker for those who are short, and a disaster for investors who are long. And anybody that bet on a reversal here needed to wait until 1 a.m. to have some kind of a relief where it moved up from the lows to the VWAP and then basically closed at the lows. Point taken from this trade is when the market is not doing anything and your favorite stocks are basically moving sideways, there's absolutely no chance of a great move there. Okay, not maybe absolutely no chance, it's not the right word. There is a very little chance that something will happen with the leading stocks. Go to the fringes and look for trades, and again, maybe you can find an entry point that suits you. Again, I don't know, there are so many trading strategies. Mine is mainly looking for shorts on at the lows, if the low is a round number and it's a tested level and the risk reward is acceptable and the stock is not spready, and there are other criteria that I'm looking at. But overall, no question that anybody that was involved in this trade at least had the opportunity to make a huge winner. That's by any means a huge winner. Okay, so that's and again, how do you reach it? You need to search for AON. I mean, it's not on everybody's watch list. I think 99.99% of traders don't have this stock on their watch list. It so happened that yesterday it did whatever it did, and you want to know why, go to Yahoo Finance. So there was lack of preparation for this stock. Why? Because it wasn't on an earnings list. It didn't start with a gap down, which already you can pay attention to if you follow stock screeners. So overall, this combination of not following the stock, it's not on an earnings list, it didn't gap down, and it started to move very fast. And I'm sure that you look at it, and when it breaks 88, it's down already like $4 or $5. You think it's extended, and it's not extended. So it goes another $10. Now let's look at another example, way easier. Let's take a look at SJM. Now, why SJM was easier to track and trade? First of all, let's take a look at the earnings report for yesterday, June the 10th. So you can see SJM is second on the list in terms of market valuation or market cap at nearly 12 billion, and this sun signals that the earnings are coming before the market open, while GameStop, GME earnings are after the market is closed. So clearly, it's a candidate for a trade, being that it trades earnings. It will trade the earnings. Now the result of the earnings were dramatically terrible for SJM. They reported horrible results and a weak outlook, blah blah blah. You can read maybe 10 articles about it on Yahoo Finance. Okay, so the stock gaps down from 111 to 106. That's roughly 6%. And now you are prepared. You know that the stock delivered earnings. You know that it's down 6%. If you're at least you have a link to the symbol. Okay, whether it is on your watch list or not, that's a different story. But at least you have a reason behind following SJM in the morning session. And what happens with SJM? it drops under the first low at 104, and this one, instead of moving $15 like AON, is moving only $8 or $9. Still a mega mover. This time it didn't need 3 hours. In an hour, give or take, the stock was down 10% intraday, and then again did the same thing, reversed back to the VWAP area and closed at the low. So you can see both of those stocks. Wow, this is didn't pay attention to that. Both of those stocks closed at the lows of the day, which is a terrible signal in terms of institutional investors buying the dip. They're not buying the dip. The stock closes at the lows of the day. That's a terrible outlook for today. Having said that, we'll have to follow, and maybe it can continue. I mean, whenever you see a stock that's down so much, 15%, you think it's extended. Obviously, it's not extended, not in this case. So where were potential entry points here? Again, the round numbers dominated. Started with 102, then 100, and all this basically the easy trade or easier moves were in the morning. Then the reversal again from the VWAP level carried some risk. I'm sure the stock was also spready, but the risk reward for those who followed it on the downside. And again, you need to have shorts available. You need to worry about the uptick rule, so on and so forth. Those who are familiar with short trading know what I'm talking about. So that's another opportunity here for a huge winner in a short play while the market is not doing anything. Now, it's not a given that a short trade, I'm just giving you now two examples where shorts traded or fell like a stone and did not recover. We will see other examples. I cannot show them today because we're already done with this time frame for this video. But a stock can be down 15%, recover. I don't want to say the whole 15. We've seen it happen though. So it's not a given that a stock that's down 15% must continue lower. At one point, there will be buyers for SJM despite the horrible results that it posted yesterday. So there are two other stocks on my list. eToro, that's an IPO from 3 weeks or 4 weeks ago. The stock is not shortable anyway. Okay guys, sorry about that. The dog just got excited for a split second. Talking about eToro, the IPO from 3 weeks ago, not really shortable, so I'm not gonna dive into that chart. And again, very spready. Maybe there are platforms where it is shortable, but let's move to the last one. Crack and Barrel down 10%, and you can see there was a signal. Easy or big gap down. This is the signal. Now, as you can see, the stock gaps down and then starts to move higher. Okay, so it's not a different scenario versus SJM. Take a look at this beautiful climb, and then it drops again, and then up again, and down again. So there are so many trend changes here. It makes you head spin, and then it drops at the end of the day. So was this foreseeable trade? I cannot say. So out of the 4 examples, one is not shortable, eToro. This one tough to trade, and again closed at the lows, but a tough trade. And the first 2 were unbelievable winners to the downside. And again, there are opportunities. Bottom line of this video is there are opportunities for day traders day in and day out. Not very easy to catch all of them, but that's our job. Thanks a lot for participating here, and please like and subscribe to our channel, and we'll see you in our next video.